Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along episode of the US Non-Farm Payroll Announcement. And by the way, very good afternoon to all of you, and all of you a very happy NFP Friday. But before we get into the NFP and US average earnings and US unemployment, which is being released at the same time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. Yes, that's right. I can say due diligence very quickly. And of course, know your risks at hand for entering any trade. With that out of the way, let's get started. The whole joke about me saying due diligence really quickly is I saw a fantastic comment from a viewer, a regular viewer, who commented that only I can say that word very, very fast. Just so you know, I say it very, very fast because I have troubles pronouncing it sometimes. But anyway, let's get on with the NFP. So happy NFP Day. Happy NFP Day. And this has been the main event the market has been building up to all week. And in fact, hey to you too. Good to see you. Hope you're well. Yeah, great to see you too, my friend. I loved your comment, by the way. I absolutely loved your comment. I really did. I thought it was hilarious. I thought it was great. But yes, anyway, so honestly, happy NFP Day. This is the watch along of the US non-farm payroll. This has been the event the market has been building up to, all week. But like I say, as well as that, we have US average earnings and US unemployment rate coming out at the same time. And don't forget, like I say, the reason why this is so important, because it's all about the labor market at the moment. The US has had a very strong and buoyant labor market, very, very strong. And this is, like I say, this is the thing which is, encouraging the Fed to carry on as well with their aggressive stance in raising interest rates. But for those who are new to trading, this is a very quick recap of what the NFP is, so you know what it is. NFP is non-farm payroll. It's released by the US Bureau of Labor Statistics and is the number of new jobs created in the previous month, not including farm workers. Okay, it's not including farm workers, hence the title non-farm payroll. Okay. Hey, Michael, great to see you again, buddy. Hope you're well. Really good to see you. So like I say, it's the number of new jobs created the previous month. So we're looking at August, jobs created in August, okay? And then we have average earnings as well, okay? We all know what unemployment rate is. It's the percentage of people unemployed, so we don't need to explain that. But average earnings, okay? Average earnings, okay, is released again also by the US Bureau of Labor Statistics, and it indicates labor cost inflation. What do I mean by that? How expensive it is, or how much it's going up or costing employers to hire people. So if salaries are going up, if people are earning more because it's costing companies more to pay them. So that's pretty key, especially with the price of things and inflation at the moment. Now, last month's NFP was an absolute shocker, And to be fair, it doesn't take a lot, but it does take a lot for me to be speechless. And when that announcement came out, I was speechless for about 2 seconds because I couldn't believe it. It was a complete shocker because the expectation last month was 250,000 new jobs created, but the number came in at 528,000 new jobs created. It was a complete surprise. Now, the expectation today is slightly lower. Is 300,000 is expected, around 298,000 to 300,000 is expected. US unemployment is expected to come in as the same at 3.5%. Average earnings month on month is expected to come in at 0.4%. And average earnings year on year is expected at 5.3%. Okay. But here's the thing with the the NFP number, which I want to talk about. I'm wondering that in the past, whether or not the analysts who have tried to predict the number has underestimated it. Because if we look at these numbers, and I'm going to go from January onwards. January, the expectation for the NFP was 150,000. 150,000. Okay, that's a very good question. I'm getting to that. Very good question, though. Thank you. January's expectation was 150,000. The actual number came in at 504,000. February's expectations was 400,000. It came in at 714,000. March, the expectation was 490,000. It came in 398,000, so slightly lower. April, 391 expectation came in at 368. May, 325 expectation came in at 386,000. June, 268,000 expectation came in 398,000. And like I say, last month, 250,000, 528,000. So the question I'm asking, have we underestimated it? This is why it's managed to surprise us pretty much most of the time with a higher number. How we looked at it, or how analysts looked at it, and looked at it with the COVID lockdowns coming out of lockdown, is changing it. So that makes me wonder. Okay. The other thing is the ADP job report, which comes out on a Wednesday, a couple of days beforehand. That came back with a bang because they haven't done it for the last couple of months, and I will tell you why they haven't done it for the last couple of months. The actual was announced on Wednesday, 132,000 versus 288,000 expected, so lower than anticipated, a lot lower. Now, the automated data processing, ADP, okay, they're the US's largest payroll provider. And like I said, they took a 2-month break from releasing their labor figures to correct their formula because in the past, their formula had been so off, it hadn't matched the NFP by a long shot. Remember I said the other day, some people put the ADP and the NFP together. I always think there's never a correlation, but maybe it has now. Maybe they changed their formula, so it is going to be close to what the NFP is. The other reason why I think it's dropped down, answer your question, why it's so much lower, is there's been warnings at the White House. Okay, basically, also Jean Perry, he's a White House spokesman. She had said officials at the White House are expecting the job market to cool down. Don't forget, Joe Biden, the president, he gets these numbers before we do. So they're sending out warnings to expect a cooling down period from the 528. So this is why I think the estimates of 300,000, why they've dropped it down to 300,000 or 298,000, is because of these elements. The ADP report, it's obviously been changed, so maybe it might match or get closely match the NFP, never used to, and the warnings at the White House. So that is the reason. I'm waffling too much as usual. Again, let's go through some quick scenarios very quickly. Scenario number one, NFP is announced as expected. Potentially, the market sells the US dollar before it moves higher later in the session, as the market knows it won't stop the Fed. Okay, so that's if it's expected. NFP announced lower than expected. Potential scenario, US dollar falls, the market bounces on the impression that the Fed will only do a 50 basis point rate hike on the 21st of September. Okay, scenario number three, NFP is announced higher. Market comes under pressure and dollar strength across the board, like we saw with the good initial claims yesterday and the US ISM manufacturing. And scenario number four, which can happen as well. NFP is announced no matter what, and the market's already priced in a 75 basis point rate hike, and nothing happens. Okay, here we go. I'm quickly promote my charts. We better go. Too busy waffling again. Right, this is the euro. Should be out anytime now. Okay, so we see the euro slightly dropping. Let's see what it is. What is it? Hold on. Bear with me, guys. Bear with me. Okay, spiked down a little bit. It's trying to digest what it is. Come on. Right, what is it? Come on. Oh. Okay, right. 315,000. So slightly better than anticipated. Not a groundbreaking number, though. Not a groundbreaking number. So slightly higher, not much. Pretty much as expected. Really, it's close to. 350,000 non-farm payroll. Unemployment up 3.7%. So that's bad. So that is bad. So this is why we're seeing dollar weakness initially. Average earnings month on month, negative 0.3%. So down 0.3%. Expectation was 0.4. Year on year, what was year on year? Average earnings year on year, 5.2. 5.2. So, right, NFP slightly higher, but not much. Pretty much as expected. As expected, really, 315,000. Unemployment rate, though, is worse. Is worse. 3.7, up from 3.5. That's a lot worse than expected. Average earnings also negative. I'm putting it as announced as expected because 315 is pretty close to that. But unemployment, that's it's 3.5 last month. It's now 3.7. Average earnings is negative month on month. And average earnings is negative year on year. So we are initial impact are seeing dollar weakness. Let's have a quick look at the dollar yen. See, look, the dollar yen has spiked down on the back of that. So dollar weakness initially on this. The sterling, how did the sterling do? Okay, and sterling did spike up higher. Not a massive reaction though on the sterling. Euro is interesting. Again, that spiked up a little bit. Let's have a look how the markets have done. US 500 spiked higher as well. So a little bit of anticipation. Maybe they're now thinking. Maybe their market's now thinking they're going for because the NFP was okay, but unemployment is not good. Average earnings is not good. So maybe now the market's going, the Fed's still going to be aggressive, but they're going to do 50 basic points. Gold, how did the gold react? Okay, up a little bit higher. Couldn't break that key level of $1,711 at the moment. But there we go. There we go. It's that unemployment, though. That's the shocker. It's that unemployment. Literally going up from 3.5% to 3.7%. Yeah. That is a shocker. And like I said, NFP 315 slightly is pretty much the same as they anticipated. So that's not the event. So like I say, we probably might see a little bit of scenario one. It depends how it takes to the unemployment though. We didn't take that into account. And the average earnings are lower. So we might see a little initial obviously dollar weakness on that. But then obviously maybe, like I say, maybe the market might start pricing in that indeed. Yeah, it was 3.7, my friend. 3.7. It was. And thank you for coming, by the way. Thank you for coming. Unemployment was announced at 3.7%. Previous, it was 3.5. And expectation was for it to come in the same at 3.5, but it actually came in higher, 3.7. So that's why it's negative. Well, like I say, in theory, the market should initially react in a way. Again, it's a very good question. In theory, the market should react as in the impression that, it's negative, so you should have a weaker dollar. So obviously the market is going to hopefully react. It's reacted slightly in that way at the moment. Okay, light in the moment. But like I say, I think the unemployment is a shocker. But the market is also still pretty much convinced, because there's still 315,000 new jobs created, of course, don't forget. It's not as high as it anticipated, but the market's still going to be pricing in the fact that the Fed's still going to be aggressive. But that's a very good point. But 3.7%, shocker. What does everybody else think, though? What does everybody else think? Brilliant interaction, by the way. I really appreciate that. I mean, like I say, let's face it. We look at it now. And I'll pull my charts back up. It's not half the movement we did on the previous NFP where it skyrocketed, because that figure really surprised us. I think it might take a little while for the market to digest, obviously, that unemployment number, because that is shocking. But I think it's obviously because the NFP came in pretty much close to what they anticipated. This is why we'll see a reaction but not over a top reaction at the moment. Let me see if this see the dollar yen as well again. Yes, again, like I say, it did spike down initially, but it's the NFP. It's quite close to what it is. But like I say, maybe the market will start double guessing. I don't think, personally, I don't think whatever that, I think this number, the NFP number, the unemployment, okay, they're happy to, they want to raise unemployment, of course. It sounds weird for me to say that, but they do, because they want to bring inflation down. They're committed to it. So they will be, encouraged by that. So I think the market's kidding themselves that they're going to be light on that unemployment data. So yeah. What does everybody else think though? What's everybody else's opinion? Tell me, are you surprised by what the NFP, was high NFP and high employment, but a bit of a paradox? Yeah, it is. It is, but it's a lower, good point. It's a lower figure than previous. In fact, if we look at it, actually, it's a very good point. Really good to see you, by the way, my friend. Really great to see you. I hope you're really well. But if you look at it, if you look at the last, from January, 528, 398, 386, 368, 398, 714, 504, that's the lowest NFP in, this year. So it's the lowest NFP reading. So it is a bit of a paradox, but again, it's still growth, isn't it? And like I say, Fed have said they don't mind a softer labor market. They want a softer labor market in many ways because they want to bring inflation down. But that's the thing. What does anybody else think? My voice is really dry. Again, sorry. I always tend to get quite excited when I'm doing the announcements. Maybe a bit over the top excited. Don't forget, people can ask me questions as well, anytime you wish. Okay, anytime at all. Anytime. And like I say, if you think of a question or you think of a funny comment like my friend did earlier on, in reference to me saying due diligence, feel free to leave it in the comments on either Facebook and YouTube, and I will see them. Obviously, I will reply to them next time I'm online. So you do have that. You do have that option as well. Yeah, see the euro, I will show you now, bring it up quickly. Yeah, the euro is slightly, it's spiking up again. We saw bigger reaction last week. Market still digesting this. Again, like I said, the NFP is still growth, but it's the lowest figure this year. It's that unemployment, though. I think that's what's going to digest the market. Love your enthusiasm. Thank you very much. I love the market, so thank you. Let's have a quick look at the sterling. Because obviously the sterling I've been watching a lot at the moment, because obviously we've got a big day coming up for the sterling on Monday, which of course is when the UK will find out who their new prime minister is. It's between two people, but I think the front runner, Liz Truss, is likely to win it, so I think she's favourite. But yeah, we'll find out. So it's going to be a big thing on the sterling. But anyway, okay. Like I say, if you think of questions, if you can't think of a question at the moment, or you think of one later, put it in the comments section on either Facebook and YouTube. I will read them, and I will reply to them next time I'm online. And don't forget, I'll be back online again in just over an hour's time to cover the US session. By then, the market should digest this, and then we can talk a bit more about it. Plus, have a look how the stock market is opening in the US. Maybe today might be a day at last they can get a little bit of their gains back, because let's face it, it's been carnage in the market since Friday, since Jay Powell's speech on Friday. And nobody in the market, or nothing in the market, has been having a good time of it. So you never know, maybe we'll get a little bit of a bounce on that. Anyway, big shout out to Johan, NF790, this chap, I can't pronounce your name, unfortunately, Atabek. Thank you ever so much. Michael, everybody who's interacted and asked questions, thank you so much. I really, 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 really appreciate it. I really do. And thank you to all of you who've taken the time out to come and watch this watch along. I really appreciate your time. I really do. Now, like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you like this little episode, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and put up with my over-the-top enthusiasm, because I love the markets, give me one of these. I see I've got a couple of likes already, which I really appreciate. Give me one of these because it's nice to know that you like what I do. Anyway, till next time, which will be at 2 p.m. UTC. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.